Hello? All right, there we are. Some lunatic unplugged my microphone. I've absolutely no idea why, but it made the morning more interesting, didn't it? For at least for you. Cat sabotage. Yes, seriously, made me wonder about the other video I recorded earlier, whether there was any sound on that too. Anyway, very weird. I blame the cats, of course. So apologies for the slight tech issues here. My intention is to explain to you whether we can trust this market rally more than this microphone cable, which is now across my desk. And overall, I'm a pretty optimistic guy. I'm pretty bullish. I literally just spent the last 15 minutes or so going through my portfolio, just moving stops up, which is what I do when the stocks go up. So I just kind of reduce the risk, right? Or rather, I lock in more and more profits here. So your cats are your mic caught. Yeah, something weird going on there. Silent trading today. Yeah, that's very weird. I have no idea how does that happen? How does that even happen? How does somebody unplug something and not weird? Okay, stranger things have happened. Anyway, let me walk you through the reasons why we may or may not want to trust this market. You guys still can't hear it? Seriously? Can you? Sounds okay. Yeah, you can hear me now, right? It's just people tuning in late. Tell me if you can hear me, guys. Put a one in the chat if you can hear me. Otherwise, you can hear. Okay, appreciate that. Thank you very much. I think as people who are joining late, they'll comments show up still on time. All right. So this is from your commander-in-chief, Donald J. Trump. He says, "For all the cost-cutting Republicans, of which I'm one, remember, you still have to get reelected. Don't go too crazy. We will make it all up 10 times with growth more than ever before." Thanks for all the ones there, guys. Thank you. So what we're going to get? We're going to get big tax cuts and then some sort of promise of big growth. And that should set the market on fire, animal spirits and all that sort of thing. So in itself, this bill, whatever you think of it, whatever your politics are, well, it basically prevents the biggest tax increase in the history of the US, and it just hands loads and loads of money to people with money and loads of money to the large companies investing in the US. So these are mostly companies that are listed, and we can invest in them. So this is a good thing. The second thing is the Canadians have folded even. And I'm sorry if there are any Canadians on the chat here. It is true. You have given in on the digital services tax, which I absolutely loathe. Digital service taxes are a horror show. So for those of you guys who use Trade Vision, possibly, if you're Canadians, you won't have to pay digital service tax anymore. Who knows? We'll find out if this is actually true. But yes, the Canadians have basically said, all right, we're going to pull digital service tax so we can continue to negotiate, which again is very bullish because it means, well, it's what the market wants. The market wants less taxes, and the market wants deals. This is very, very good. Where is Winston? Winston has abandoned ship. He is about as loyal as a bowl of food. And he has decided that his sort of nanny walked past and she looked at him and he said, "You're going to give me snacks, aren't you?" And he's dropped off. And I was like, what about me? So yes, I've been abandoned, sadly. But I do still have a lot of cats around here, but we just played with them to calm them down a little bit so they're not running around so much. Another reason to be bullish, and you're starting to get the gist here that I'm actually pretty optimistic, right, for the short term. And we've had 64 rate cuts so far this year. That's the most since 2020. It might put us on track for the biggest rate cut year globally. And it does one thing. What do lower rates do? Well, lower rates are, in essence, very, very good for the market. How does it happen? Well, think about it. Lower rates means what? Well, bunch of things, actually. Lower interest rates, right? Lower interest, stating the bleeding obvious, on bonds. So what does the money that is in bonds therefore do? Well, that money the bond money wants to therefore go somewhere with higher returns. So that money tends to go to the stock market, so to stocks. So that's a good thing, that little thing there. Now, on a more fundamental level, you also have, you get more investment. Why? Because it is cheaper to borrow, so you get more investment. So what happens when you invest? What happens if you are, Microsoft, you're buying a lot of chips? Well, you're basically sending money to NVIDIA and maybe to Dell and a bunch of other people who are making servers and that kind of stuff and equipment and cables and copper and warehousing and, trucks and loads of stuff. So loads of money, again, moves to other companies. And therefore, those companies now have more money. So in essence, actually, more investment also brings more money into other stocks. So that's, again, good. So pretty much whatever happens when interest rates drop, it's good. Now, the third angle to this is, and this is perhaps the most sort of esoteric, is valuations increase. Can we spell valuations? We shall try. Valuations go up. It's got a lot to do with risk-adjusted returns and boring stuff, but essentially, this riskier stock prices go up, which means, well, stock prices go up and therefore everybody's happier. So if we get some rate cuts or just a promise of rate cuts, and we are going to get a Fed president to be at some point, I think, and therefore the market's conversation will start moving around more rate cuts. But even without the new Fed president, we were still going to get some rate cuts. 90% is the probability of a rate cut for September that the market's good priced in right now. The first 45% of this video has no sound. Yes, David. Yes, so somebody plugged my microphone out, which is something I'm going to have to investigate. The culprit will be brought to justice, and all that sort of thing. And then, yeah, we get the big, beautiful bill. And the big, beautiful bill, what's it do? Well, it keeps taxes low. So it basically enshrines the Trump tax cuts from last time around. It gives huge tax breaks for investment in the US, basically. And what does that do? Because we've done this before. We've been at this party before in 2018. Well, it creates essentially a bonus for stocks like basically the Max 7. So anybody who's spending a lot of money on cloud computing and chip manufacturing and all that stuff, they're going to get a big bonus. So what's going to happen with that bonus? That bonus gets passed on to whom? That usually gets paid out as buybacks. So buybacks is essentially a way of returning money to you and me, shareholders. So this is very, very good for the market. And you might hate the thing, whatever, politics and all that, but it's good for the stock market. Simply that. It might be, you might hate it, you might love it, whatever, who cares? It's good for the stock market. So my only job when I look at things in politics is this good for my portfolio, yes or no? Which stocks is it therefore good for? Which sectors is it therefore good for? And then we need to answer that question, and then we need to find companies. So we know this is good for the companies that invest the most. So who do we know is going to invest the most? Well, let me give you a few names here. There is Meta, there is Google, there is Amazon, there is Microsoft, there is arguably, the whole supply chain of basically NVIDIA. They're building, so I'm going to put NVIDIA essentially suppliers. And then how do you know which one to buy? Well, so you make this kind of pre-selection, and then you actually look at the charts, and then you simply apply TSMC. Yeah, that's sort of NVIDIA suppliers up here, TSMC for sure. So we then look at the actual charts, and we go, well, does this chart look like something I want to buy? And how do you know that? Well, you look at, I was just looking at this one, for example, and this is one that I own, or somewhat unhappily. So we're doing something about that. And that also happens, of course, from time to time. We don't just always buy pure winners. But TSM, for example, well, that looks pretty good, doesn't it? All-time high, taken out pretty much the all-time high here of January. So that looks like the sort of thing we might want to buy. And you need to understand a couple of key things here, like those ones. That one down here is a bit of a problem, but taking out the high is a good thing. And once you understand those 3 or 4 things, you make better selections, you make better choices, and therefore you're very, very likely to have better outcomes. And above all, you will also never have big losses again, right? And if you want to understand that, then I'd encourage you to actually learn the rules to that, which are super simple to learn. They're down here, felixprehn.org/get free. You can learn that in like 15 minutes, and you will never, ever look at a stock chart the same way again. There's a link down below. It's also on the screen, felixprehn.org/get free. Shouldn't you only invest in what you understand? You should only invest if you understand investing. So I care a lot less about the company, and I care a lot more about how Wall Street sees the company. And how do you know how Wall Street sees the company? Well, the stock chart tells you that, if you understand what to look for. So we don't particularly care about whether TSM has the better equipment, or whether, AMD's chips are better or faster or more power efficient or something. I don't know, because I'm not a microchip expert, a semiconductor expert. I am not. So I don't pretend to be. So therefore, it doesn't really matter all that much. What I'm seeing is that there is a very, very good setup here from many, 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 many reasons. And then I see institutional money buying it. And because I'm seeing that, I simply follow the trend. And when the flow stops, and say the stock goes up a bit more, and then it starts doing this and it starts doing that, well, then I'm going to sell it here without a thought, because it's automated. So I don't care at all about the business, the company. I know it's inspiring, isn't it? It's sort of no belief system whatsoever in a company or its management. That's basically how we make money. Right? You want to learn that. You want to become a sort of a vacuous when it comes to belief in management, then watch the masterclass down below. And one other reason I very much like this rule-based system is not just because I was taught it by guys who've been doing this for 20, 30, 40, 50 years in the market, and that's how long Wall Street's been using these rules to make money from, but because predictions and forecasts and positive things that management says are not usually worth very much. At the moment, the stock market is basically predicting that interest rates will stay higher for longer. Well, this is a chart from Deutsche Bank, probably the only useful thing they've ever produced. I have a friend who works at Deutsche Bank, so a bit of a tease there in that direction. And the dotted line was the prediction at the time of where interest rates would go. And you can see they were always wrong, right? They were always saying rates are going to go higher, rates are going to stay higher, and they are just always wrong. So predictions is just not really a game we want to get into. This whole like, oh, by the end of the year, this will happen, or by 2027, this market, yeah, maybe not. Why don't we just follow the money and actually make money in the process? And then if we're wrong, we don't care, because we make money in the process. So I would not pay too much attention to the forecasting crowd, because they're typically wrong more often than they're right. So here is Goldman Sachs predicting the market. And everyone's taking notes. Everyone's like, oh my God, I need to buy those stocks. And what are they saying? Well, they're just telling you what's the sentiment now. And that actually makes a lot of sense. So I look at that too. So what are they saying? It's not like we are bullish on it. They're not saying Goldman Sachs, we glorious bank, we are better looking than everybody, therefore we know what stocks are going to go up. They're just saying at the moment, semiconductor sector is bullish. Internet stocks are bullish. Media is bullish. And they name you some. AVGO, Oracle, Amazon, Google, Apple. Actually, Apple is down. Apple, I'm not sure about Apple, to be honest. They're saying banks, and we are bullish on banks, and we own a bunch of banks. Payment processors, payment system, fintechs, generally speaking, they're bullish on. Small biotech, they're bullish on. Healthcare service, they're bullish on. And they're simply just looking at the market, and they're going, where is the money flowing? Retail, restaurants, we're in some of those. Machinery, refiners, and the energy sector. And if you just sort of take this approach to the market, then, well, you're very unlikely to get really wrong-footed. And that's really why I like this. Dr. Denise, appreciate you. Thank you for the kind comments. You see, so if investment without understanding is gambling and the house always wins. I agree with you completely. Absolutely. You need to understand the market. And most people don't. Most people don't know the rules. And then they're wondering why they're never making any money. And then it's like, but I keep throwing money at it. It's like literally going back to the table again and again and not knowing the rules. Now, the beautiful thing of the market, but the market is it isn't like a casino where you will always lose. It is more like a game where there are rules, and if you know the rules, you can win. So I'm a big fan of learning those very rules. Now, shall we look at some of our favorite stocks? But honestly, if you really want to understand the hows and the whys, and some of them you guys are mentioning SoFi here, for example, the key thing to understand is like, why did we become bullish again on SoFi? Somewhere around here, we bought, around $15, above 15.65, right? Because we did not love SoFi as much as you'd like us to in this whole experiment, because it wasn't a particularly good setup. And what we're starting to see now, and that's one reason I'm excited about it, is the sector, fintech, is coming back to life, rate cuts and so on. But also we're starting to see volume picking up. So we've had that rally up here and volume actually increased. And that's the sort of thing that we want to look for, right? So again, this is rules-based. It's not, I think SoFi is a great product. I think I have a great CEO, one of the better ones out there for sure. But none of that matters, because ultimately, if the market decides there are no interest rate cuts, for example, SoFi will tank. So why endure the pain when we can just make money when it's going up? And at the moment it's going up, and we're very, very happy about that. And what if it starts tanking again? So what if it goes up, a little bit more, maybe a lot more, who knows? Hopefully a lot more, because then we'll make a lot more money. But what if it starts going sideways? And then what if it starts to actually tank again? Are we going to hold on to that? Because we're bag holders. We have a belief in Noto and Co. And it's the best company in the world. It's the one that'll make me retire and all that. You can do all that, but it's just unnecessary pain and suffering, because there are always good stocks that are going up. Well, at least there are stocks that are going up. So what are we going to do? Well, we would then sell here. Now, so we're going to have a little bit of a drop. We're not going to sell at the top of the market. Nobody ever does that, but we're going to sell somewhere slightly below it. And that means we'd actually lock in a profit. And for me, that is the entire purpose of this exercise is profit. So that I have more money, my family has more money, we have more options, more choices, more freedom, and I will never, ever, ever have to go to work again. Which, I already never have to go to work again, but it just sort of cements the freedom. Okay, what have we got here? We got Palantir. Yeah, so that dropped there on Friday. That's something to do with the Russell mid-cap rebalancing, something like that. So they kicked some tech stocks, basically reduced the weighting of tech stocks, which is why that happened. If you look at where we are pre-market, we recovered about 5% of that already. So more than half of the day's drop. So I wouldn't worry about it too much. It's just institutions dumping there. I still think this is still a positive setup. It's just a bit of a drop there, 5% down or so far. No emotions. Yep, that's really the goal. We all have emotions, but that's one of the reasons I like doing all my trading on a Sunday, right? Because there are a lot less emotions when the market's closed. It's a really, really good thing to do. Market stop, also limit stop. A stop to me should be market, because you want to get out, you don't really care about the 2 or 3 cents at that point. You just want to get out. What else we got here? Bigly rules, indeed. Who understands the rules, or who feels like they have some understanding of the rules? If you have some understanding of the rules, put an R for rules in the chat. I'd love to see it. And then if you're completely new to rules, put an N in the chat, and we see if we can do something about that. You will like the Arista chart now. You can tempt me with charts. You're like, Felix, go and have a look at that chart. You're gonna like it. Oh yes, textbook stuff, hey? Textbook stuff. Absolutely more. So what do you see? What do you see? And some of you are understanding the rules. That's so cool. So many R's. Brilliant. Amazing. What do you see here? Well, you see this, right? So what do you want to do? You basically just want to take out the highs here, exactly wherever that is. You can have a look at the stock chart in more detail. And then if that pops out there, we should see hopefully a pretty bigly rally. Everyone's writing R's, got your rules. Brilliant. Amazing. Who doesn't understand what the heck I'm talking about? That's also completely fine. Put an N in the chat there. The only thing I'm missing here is, volume. We need some volume here. The setup is a very, very good one. And it makes sense, right? You'd expect the whole sort of hardware supply chain system around the GPUs to do as well as NVIDIA, which looks very, very good to me right now. Of course, not financial advice. I'm not telling you what to do, but it looks very, very good right now. So there have been multiple entry points for this one. I think the last one here about 140, we're at 158 right now. The only thing there, the only slight fly in the ointment is that red line up there, which is a Trade Vision unique indicator, which basically tells us where the market, the institutions, the market makers will likely sell. So there is resistance here. If I could spell resistance, I added an extra S. It's the SS resistance at $160. And we're trading at 158.78. So we're pretty close to that. So watch out for that one. It only took me 18 months to learn. You can do this a lot quicker. No, come on, you can do this a lot quicker. But perhaps you have a very special brain who's going to absorb this in a very special way, and that's also cool as long as you get there. Is HIMS a buy? It is recovering. It is certainly recovering. I don't like stocks that have these gap downs. It is recovering. Volume is getting better. Pre-market, we're nicely up. Part of the problem is that you have the guys who bought here thinking this is going to go up forever, it's in a straight line. There is a good chance they're going to create some resistance. So this is not going to be as easy to get through these guys because they might sell there as you might think. So to me, I feel they're better setups without the resistance. But yeah, it's a lot better than it was. AEVA and BBAI. AEVA is just the gift that keeps on giving. You're just teasing me with this now, aren't you? Because I sold here. I had to stop. I only made 80%. Boo-hoo, poor Felix. On the bread line now. It is now up 370%. So I only missed out on 290%. It's all good. It's all good. I'm glad some of you guys are making loads of money out of this one. What about BAI? That was the other one being mentioned there in the same sentence. That looks good too. We called the entry point here at 454. That was the more conservative entry point. Would now be 40% up. If you were a bit more of a trading loon, you would be up 60% right now. So risk sometimes pays. But what am I liking about this one? Can you see that? What am I highlighting there? What am I highlighting? No emotions there. No, none whatsoever. I'm going to throw in all the antidepressants I can get after the end of this show. You feel the AEVA miss. You just get used to the fact that you will always miss out on things, and it's just okay. So normally I don't look at them and I didn't realize, but obviously you guys are rubbing it in my wounds every single day. Volume bigly, absolutely. Institutional volume, that's what we're looking at here for Big Bear. Big Bear volume we're looking at there. So this looks pretty good. Pretty good. Now, of course, you only ever make money if you have a stop, right? If you don't have a stop, you're very likely to lose money. Now, the market is going to open in just 3 beautiful minutes. Which of course we've missed tremendously. Who misses the market on the weekend? I'm always like sort of wandering around. No, I actually like it because I do everything I do on Sundays. So for you guys in my mentoring community, even you got my list for the week, right? My buy list for the week at Sunday morning. At least if you're in the US. If you're somewhere else, it's going to be slightly different. And therefore, you can just sit down on Sunday and you can really, really calmly and collectedly have a look at what the market's doing. And you don't have to be, oh my God, should I buy this now? Look, it's going up, pay a bit more, pay a bit less, pay a bit more. Oh no, let's do it. Should I buy more? What if it goes up more? That kind of thing that happens to people when the market's open. We don't have that by setting things up on the Sunday. And that's why I really, really like doing it. So I'm loving our Sunday trading system here. They need to have a 2-week vacation from the market. No, that would be sad. That would be very sad. What would we do with ourselves? Yeah, this is posted early. That's sort of the goal. I'm not going to promise an exact time, but Sunday morning would be the ideal time. Sort of 9 a.m. Eastern is sort of the intention, but it might be a little later than that occasionally if I'm struggling a little bit with charts or something. But most of the time, that's sort of the intention. And therefore, it'll give you the chance to really do everything on a Sunday, because I think it's such a happy, valuable place to be. Now, Nike, that looks still pretty good. Yeah, it still looks pretty good. At the top end of Friday's trading range here at 71, 50-day moving average line spiking up, volumes looking good. So Nike is back, apparently. The only fly in the soup here is that sort of resistance zone here. So all of those guys there, they might want to sell. And that's quite a long period of time that those people were back holding for. So they might, who knows. But yeah, not the cleanest there. Oh my God, we need to ring the bell, do we? No Winston today, I'm afraid. He has abandoned me. He has decided to go for treats instead. If you are wearing earplugs or something, your sensitive ears, you might want to, take those things out of your ears. I've warned you. The market is... officially open. It wouldn't be officially open if we didn't do that. It just wouldn't open, right? It just wouldn't open at all. Did we mention the Goog OpenAI deal? Yeah, we mentioned that, I think, on Saturday. OpenAI is renting, I believe, renting, I think is the correct phrase, isn't it? Some Google chips to hopefully make OpenAI cheaper to run, while everybody from OpenAI seems to be running to Zuckerberg. But yeah, this looks actually pretty good if you look at this sort of little pattern here, and where we opened with a little gap up, top end of that zone there. So is it a buy? Is it a buy? Is it a bird? Is it a plane? I mean, I'd say if we close, let me zoom in a bit on that. So I'm a pretty risk averse kind of a guy. So I'd like to ideally exceed the high there. So say 180, what was that? 182.50. Yeah, sort of closing above 182.50, and I think this would be very, very bullish. The gap up here is also very bullish. So again, there is a range of, you could also say this was the high 180. We're now at 181. So if we close above 180, it will be bullish. There are sort of interpretation within that, depending a little bit on how risk averse or how risk loving you are. But yeah, Google looks good. It looks good. So we're liking Google, at least I am. Rocket Lab. Yes, the rocket ship continues up, which is very, very nice to see. So that's a good one. That's a beauty, isn't it? Taking out all the highs, it looks absolutely good. ARC-Q. It's just consolidating. I mean, I think we bought it down here in May. So overall, that looks looking pretty sweet on big volume. Right now, we're kind of doing one of those consolidation phases, and that's what happens, right? So you blow up, you tend to go a little bit sideways. It tends to be a pullback. We went a little bit sideways again. We blew up sideways. So the question, therefore, is simply, well, it's either going to go down or it's going to go up, right? So what can we do about it? Well, you could set a buy order there, and you could set a sell order here, and that way you've got both sides covered. Well, if you were in it, otherwise you wouldn't need to sell it. Zim, not looking great. Still all right. I mean, it's not amazing, obviously, but I haven't been stopped out of it yet. So for me, we're still in that zone of possibility. But the gap up was good. Today we're trading at the lower end of Friday. So again, I wouldn't sort of, 2% isn't really a great deal for a stock like that. These are volatile stocks. Just look at the chart, right? This thing moves 10% and 13% and, a lot regularly. So I wouldn't be surprised by moves that size. I'd rather own the companies than Cathy Woods. Yeah, that ARK was not ARK, but actually I am at the moment in this one, ARK W, which looks pretty good, and bought it here. Why? Zigzaggedy lines, rules. I'm very happy with that one. So at the moment, that's up 38%. So that looks pretty good. So there's just so much opportunity. There's so many things you could buy way more things that look good you could buy every week than you could ever want to buy, that you could ever buy, because at some point we all run out of fresh cash. So the only way you'll be able to spot those and be able to pick the better ones every week and every month, every quarter and every year, is if you actually know what you're looking at. And most people don't. They just go, oh my God, it's up, it's down. Should I buy it? It's going to run up. Should I buy it? Is it too late? We can fix that very, very simply if you simply give yourself the permission for 15 minutes to actually learn. I'm putting the link in the chat for you at felixprehn.org/get free. Ford. Yeah, that was actually on the list, I think, last week, but it didn't do anything. And this is a company that I think is just horribly managed, but it's a good brand. But yeah, and it sort of did this, right? And we wanted to break out of that, close above that line, I think 1085 or something. It hasn't done it. So I'm not in it. Very simple. So nothing bad happened. We just saw an opportunity. It could have been an opportunity, but it didn't materialize, and therefore nothing actually happened. Groy, yeah, gold stocks are pulling back a little. I'm still kind of medium long-term bullish on gold, but yeah, you might see a little bit of a pullback there. And I think if you look at how Friday panned out, you might see a bit of that with a lot of stocks, so they might just pull back a little bit. And then some other ones that have already pulled back, they're gonna be the ones that we might want to buy because they're starting to move up. So a little bit of rotation happening there, as we've been expecting. But I really think this year the index fund investors are going to get disappointed, and I think the stock pickers are going to get rewarded, because it is just an uneven market, a very, very uneven market. And that's what we're seeing. Last year, the rally was entirely skewed towards a very small sector of stocks. So you want to be in the right stocks. You don't want to be in like the everybody stocks. Will banks break out? That looks pretty good, doesn't it? Bank of America. I mean, it's a small move, but it is Bank of America. What do you expect it to triple overnight, you know? But it's taken out most of the resistance over here, which is very, very good. So we go a little higher. You go an extra like 50 cents higher, and you're on fire. So I'm quite liking it. I bought some somewhere around there, I think. Oracle. There is a gap up. So we get rewarded, hey? So why do we get rewarded? Because we saw the entry point down here, something like that. We bought there, and then we got a gap up, went up, and what did we get? We get a pullback. Almost happens every single time. We're doing this, and then we get our second gap up. So now we are happy, right? And now we're like, ooh, rules actually work. I'm making money with the rules. Rules are good. I like the rules. The most important thing then is always to secure your gains, right? So put a stop somewhere. I don't know where you want to put it. Put it there if you're a bit more, risk loving. Maybe a little higher if you are more conservative. That's really up to you. But yeah, looks amazing. And the other beautiful thing is with automations is that you get in on them earlier, because otherwise you always miss it, right? You always find out after the fact. Apple. Let's have a look at that one. Still not doing anything for me. And one of the problems with this is that we're below this purple line there. That's the 150-day moving average line. So if you buy stocks below that, you better be a trader, because you're taking a lot of risks on. And I'm not liking it. And we're also below the 50. So I'm not liking this at all. This does not look good in any way, shape, or form. MP, what happened? I haven't looked at it, but I presume the rumors of rumors, it's apparently official, of a deal with China for rare earths. So that would hit MP somewhat, and it has. But again, it still looks pretty good, depending on where you bought it, obviously. Archer. I just had a look at that actually because I have a position on this still, and it's within my range of stop still, and it's not looking wonderful. Like, I wouldn't buy it here. I'm not telling you what to do, but I wouldn't buy it here because what we were looking at before was that, right? And then we went down, which we did not enjoy, and now we're kind of consolidating down here. So, not loving it. It's not collapsing either. You know, we've been there before. We've done that sort of thing before, but it's not screaming breakout right now. Oh, wrong chart. You're quite right. It is the wrong chart. It says Arch Capital. Archer. Okay, a little bit better. It's a little bit better, but it's similarly uninspiring. But no, it is not quite as terrible. I was also wondering, my stop was quite generous on that one. So yeah, there you are. So no, it's doing a similar sort of thing, but it's doing it at least above the 50-day moving average line. Who spotted that? Well done. You deserve a cookie. Alan, you spotted that. Penguins spotted it too. You see, penguins got better eyesight than me, apparently. It must be the yellow glasses. No, so it looks better still. It is still on a positive trajectory, just not quite where we would like it to be. Cool says Zeta will hate the chart, but sometimes I need a bit of risk in my life. Why? Why do you sometimes need a bit of risk in your life? I mean, you could scale your building on the outside and hope not to fall off. I mean, you also don't do that, do you? You could run across a highway and go, that's a bit of fun, isn't it? You don't do that either. But how many hours do you work a day, my friend? 8, 10, 12, if you count commuting and lunchtime? And then you take that money and you put it into something that looks like this. Terrible. Yeah, you got to ask yourself, why do you do that to yourself? Maybe you really enjoy working and maybe you just want an excuse to sit in that cubicle for a few extra years, because that's what you're doing by buying drivel like this. I'm not telling you what to do with it, obviously, but it is not pretty, my friend. It is not pretty. It is hopefully going to go your way and you get lucky, but luck very rarely makes people retired. Loving the SoFi breakout. Yeah, that was a good one, isn't it? We called that one quite nicely this time. Me too. The main thing is set a stop, my friend, because we've been there before, right? We get rewarded and then, you know, the Lord giveth the SoFi investors money and then he takes it away. So make sure you have a stop so that he doesn't get all of it. Lose small, win big. That's precisely what we do. That is like, we should make T-shirts with that or something. There are only 3 choices that we allow our stocks to have. The first is win bigly. The second is win small. And the third is lose small. So we never, ever allow big losses. And that is, in my humble opinion, what makes us all the money. Tesla. We're going to have a look at Tesla for sure. For sure. But in all seriousness, to learn the rules. Life will be very different if you understand what they're actually going to do. So let me I'll put the noise suppression back on so you don't hear me, breathing quite as much. Yeah, not a lot, really. It's just going sideways. That's really all it is. I can't really tell you much more than that. I mean, you can see it. I can see it. It's going absolutely nowhere at the moment. It is what it is. We're getting delivery numbers out this week. I can't remember which date, but we are getting those out. They might not be that good. So that could be another reason for this to go down. Merch, make the T-shirt. We should probably do that. I'd wear the T-shirt, says Caroline. Okay. We should maybe do that. Should we write bigly wins on it, or would that offend 50% of the audience? Probably, right? Rules take fear and greed out of the equation, says Joe. That's precisely it, my friend. That's precisely what it's about. When you set your stops, do you sell all or just reduce? That's not an easy question to answer. The simple answer would be just sell it all. That's the simple thing, and I do that a lot. There are moments where I might close a position partially. And that's typically on something, given that you rubbed it in my wounds earlier, given if you're in on something like this and you are now up a glorious 340%, it was 54 before, now it's 40, then say this thing comes down somewhat, maybe you close out half, you got your money back and more, and maybe you let the rest run a little bit more for a little bit of a lower stop to see whether the dip that you're going to get, maybe the dip will be this, right? Maybe you sell half here or something, and then maybe it goes a little bit lower, but then it bounces back up and then it continues on its path. And maybe you had that stop somewhere there. I'm not giving you precise numbers here, but I'm just saying that, and then you'll be happy that you still have sort of risk-free money in that trade. So that's something you can do, but you don't have to either. You can just, a lot of the time doing the simple thing is actually the better thing, because it means you've done it. Whereas if you make it more complicated, it means you don't do it, and then you haven't got risk management, in which case you're in problem. Should I move to Hong Kong so I can take my massive gains? Well, yeah, it is tax-free here, which is an advantage. I don't know where you live, but you could also move your portfolio into a company or into a Roth IRA, or there's a bunch of things you could do that could potentially be a good idea. Lose small, win big, and Winston. Looks good. I kept 10 shares of ASTS. Glad I have a little. So yeah, sometimes it can be a thing to do. And yeah, so there is one, for example, again, that's just blown out tremendously. So, there's different ways of interpreting that. We're missing Winston. I know. It's very sad without Winston, isn't it? He was cruelly snatched from me, and I didn't have a banana or any sort of snacks to offer him. So he looked at me and said, "You lose. They've got food. They promised me another dinner." Actually, his tummy's been a bit upset, so he's getting a late night dinner, which shall hopefully make him feel a little bit happier. I heart charts, Kevin. That's quite good on as well. Do you set orders before? Yeah, always before. So I don't do anything Monday to Friday pretty much. The only thing that I do is I move my stops up, and it's a wonderful thing to do. Archer starting to fly. Well, it's up 4%, but it's still in the zone. So I mean, I like your optimism, my friend. So gets well soon, Winston. The cats are surprisingly quiet. Well, what we did is we put them into actually my gym. I put them in there and then let them loose and play with them for about half an hour in the evenings, and then they actually get burnt out. One thing they really like are I've got gymnastic rings, so they play with the sort of strings of it, whatever you call it, belts or whatever, and they just race around for ages, and then eventually they actually get tired, and then they probably wake up again in about 2 hours. But yeah, they're super, super cute, those little guys. A Roth IRA is a great idea, Michelle. If you haven't looked into that yet, please do. It's a brilliant, amazing, amazing thing. And candles are not just for dinner. Loving all of that. Automator of wealth. That's really the idea, my friend. Automate, set rules, stop thinking about stuff. Just follow rules. Use your emotions for emotional, happy things in your life. I wish you a beautiful start to this week. I think it's going to be a lovely one. But I would be a little cautious of some of those pullbacks. So make sure you got stops set up. That's what I would always recommend. And I hope to see you on the next one.